It's February 20th, JLD here, and welcome to MSTR Today and the Treasury Titans. Nothing in this video is financial advice, but Michael Saylor wants us to ignore the bears. Ignore the bears, believe in your thesis, keep putting one foot in front of the other, because as Michael Saylor posted just yesterday, never been more bullish. And this is bullish with a capital Bitcoin B. I mean, listen, at the end of the day, this is a boring, crabby, downward chopping market. I mean, we've recovered a little bit to 68,000. I mean, did I think that in 2026 I'd be saying that we recovered to 68,000? Absolutely not. So listen, this has been frustrating. This has been choppy. This has been crabby. This has been downward pressure. At the end of the day, those who believe in the Bitcoin thesis know that there's 10 days a year, 10 days a year where your face gets ripped off to the upside when it comes to Bitcoin, when it comes to MSTR, when it comes to strategy. And if you're not in it for all of those 10 days, you're not going to get nearly the upside that the rest of us will get that are just believing and holding. Michael Saylor's never been more bullish. That's my guy. British Huddle says, Google searches for is Bitcoin going to zero is the highest it's ever been. I mean, that's higher than when it was down to 15,000 in 2022 after the FTX collapse and all those other crazy things happened. That's insane. Sounds like retail is getting ready for a good spanking. British Huddle knows it. I know it. At some point, this is going to turn around, and there's going to be a lot of people who are going to feel so sick to their stomach that they just didn't put their head in the sand at the very least and just hold. But time will tell. Mike says, I can see from multiple dimensions that they're trying to tire out and frustrate the bulls. Unfortunately, they seem to be running out of juice. Predicting the exact timing of reversals isn't possible. But what's important is to be positioned correctly when they come. Watch, win. Mike, I'm with you, brother. Joe says, I have no desire to play the game of timing bottoms. I enjoy buying great assets that most people hate. I like the coin. Joe, I like the coin as well. I like what the coin is doing for MSTR. I like that Michael Saylor is using the coin, that's Bitcoin, to do some incredible things in the digital credit world. Stretch is the iPhone moment. It is coming. It's time. Has arrived. I mean, when you do almost $80 million in 1 week of ATM, hundreds of millions of dollars in volume, the time has come. But I mean, what is this going to do in a bull market? Wow. Just crazy to think about. Chris says, I'm at a place now where I give minimum attention to trolls and emotional, irrational bears. I collect receipts instead. No one gets a pass. I love all these receipts that he has. I'm especially looking forward to the MSTR and Bitcoin receipts. It's going to be a thing of glory for sure. 100% strategy says, I should say strategy maxi. What if MSTR hits 1 million Bitcoin? 717,000 today plus 283. That's 5% of supply. Corporate dominance unlocked. Largest strong hand. Fiat raises equals perm sats pressure. Saylor's engine never stops. Scales aggro. High press ops own empire. Normies just debate price. Normies will always be debating price, while Michael Saylor is just stacking Bitcoin, just stacking the apex predator of the world, the most pristine capital that will ever exist in our lifetimes. Growth in Bitcoin Treasury Reserve, you can just see what's happening here. It's just doing a nice little up and to the right. Looking forward to celebrating 1 million with you all. 100% strategy says individuals will come back, but they will buy strategy equities because most Bitcoin will be owned by strategy. Strategy will own so much Bitcoin. I just wanted to post this. I'm not going to read this whole post because it's very long, but I just love how Simon's stepping up as the MetaPlanet CEO. He says it's easy to hide behind anonymous accounts, criticize others, and incite outrage without taking any responsibility. However, I have no qualms about taking public responsibility for all my statements and MetaPlanet's actions. Therefore, I will directly address each of the claims that have been raised. And he addresses every single claim that goes through, just honestly and openly. And then he says, criticism of Metaplan is welcome at any time from anyone through any channel as long as it is legitimate. However, we cannot tolerate the dissemination of factually inaccurate information to shareholders who are already being forced to make judgments in a highly volatile market environment. If there is sincere questions or concerns, I am here, reachable, and always ready to respond. I take responsibility for every action we take and every word we utter. And man, this is the type of person I want on my side. Metaplanet's had amazing days. They've had horrible days, and they've had everything in between. Right now, it's the struggle bus for Metaplanet, as it is for every company that's associated with Bitcoin, and Bitcoin included, obviously. Of course, that pendulum will swing and these haters will disappear. At the end of the day, it's, again, you got to remember, it's people that have ulterior motives. They are short sellers. They are already short. They're trying to make money by scaring other people to continue to drive the price down. They are fudders. They are haters. They're just bad, miserable people. Everything in between. And this is in response again to Simon. Simon's responding to this post right here that goes through a few of these very, again, inaccurate things that Simon addresses very calmly and professionally. So here we are, more than halfway through February. March is approaching. Things are happening. Strategy World's coming up. Michael Saylor is going to be delivering great presentations from stage, as is Fong Lee and many other people. And man, 2026 is going to be a year. It's going to be a year. Now, what does that mean? Only time will tell. I just know it's going to be a year. I'm personally very bullish. I'm personally very excited. I'm personally on the side of it's inevitable. And I can sit here and wait because I'm not leveraged. I'm just in it to win it. And we have a great clip from Michael Saylor when we get back from thanking our sponsors. Scams and identity theft do not start with hackers. They start with your personal data being easy to find online. Your home address, phone number, and employment history can be sitting on dozens of websites right now, waiting to be used for fake loans, targeted scams, or worse. That information is spread across people's search pages, shady directories, and commercial databases you've never even heard of. That's where Incogni comes in. Instead of spending hundreds of hours manually opting out of these sites, Incogni automates the entire process. They hunt down your data and demand its removal. Incogni doesn't just do this once. They continuously monitor these sites in the background to make sure your data doesn't reappear. I recommend the unlimited plan because when something isn't covered automatically, Incogni's custom removals feature lets you send in a specific link and a dedicated privacy expert takes care of the manual removal for you, start to finish. Remember, if they can't find you, they can't use your data against you. Take your data back risk-free with Incogni's 30-day money-back guarantee. Use code MSTR for 60% off an annual plan at incogni.com/MSTR. That's INCOGNI.com/MSTR. When you want more, start your business with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Northwest Registered Agent has been helping small business owners and entrepreneurs launch and grow businesses for nearly 30 years. They are the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your local laws and can help you in your business every step of the way. Build your business identity fast with resources, forms, and step-by-step guides, even before creating an account. Sign up to manage your business hub with lawyer-drafted documents. Northwest is your one-stop resource, makes life easy, and keeps privacy automatic, never selling data anywhere. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free.
So this is an extraordinary dynamic. And of course, the marketplace itself, right? What we see is 700 million crypto believers. The crypto industry tipped the election last year. It's becoming the most powerful, if not the most powerful, political movement in the country. And it's global phenomena. And if you're going to be global digital capital, then you probably want to rest on liquidity. So you're staring at $60 billion a day of liquidity. But on Friday, I think we had $100 billion trading. So it's an emergent, powerful asset. It's electrically powerful. It's computationally powerful. It's economically powerful. And it's politically powerful. And it's never been more powerful. So that observation, Bitcoin is digital capital, is key. We are capitalists. The capital assets of the 20th century, equity capital, real estate capital, credit-based capital. Most of the world thinks private equity, public equity, and real estate is primary capital. The emergence of digital capital is pretty profound because it represents an alternative to people who don't perhaps want to store all their wealth in real estate. As I've said before, there's really no real estate in Africa you probably want to put your family savings into for the next 100 years. There are lots of parts of the world where people just don't want to store their economic energy for long periods of time. So the emergence of digital capital is a global phenomenon. It's also a political phenomenon. It's also a technical phenomena. And of course, if you pair the emergence of digital capital with the emergence of digital intelligence, you can imagine that in a world with a billion AIs talking to a billion AIs a billion times a minute, they're not going to have a lot of patience for 20th century ways of doing things. They're not going to buy sports teams. They're not going to buy fiat sovereign debt capital. They're not going to store their money in cash. They're not going to trade gold. They're not going to want to store their capital in buildings or cross-trade commercial real estate. They're certainly not going to be comfortable with securities and all of the human and legal and political restrictions that come with them. So the emergence of digital capital at the same time as we have an emergence of digital intelligence is, maybe it's a coincidence, but maybe it isn't a coincidence. Maybe it's an inevitability. So the second point I want to focus on is the emergence of the treasury model, of a digital treasury model. What is it? A treasury company is a company that sells securities to buy a commodity that it then capitalizes on and then issues credit against the commodity. So if you sell securities, raise capital, and then issue credit against the capital, you've created a treasury company. There traditionally haven't been a lot of treasury companies because the SEC 40 Act prohibited publicly traded companies in the United States from capitalizing on securities portfolios. Everything that I'm going to describe, you could do with the S&P index or a portfolio of Magnificent Seven stock, except for the fact that regulations in 1940 put in place by the United States make it illegal. And so because you could never have more than 40% of your liquid assets sitting in securities, you find Warren Buffett's got to continually trim his position in Apple stock. He's got to sell his securities. He's always got to keep 60% or more of his liquid assets in treasury bills. And it turns out that most of these mathematical methods don't make any sense if you're using sovereign debt as your capital asset for economic reasons. So we inadvertently discovered a new business model. There's insurance companies, there's banks, there's all sorts of business models. This is a treasury business model. And how does it work? We sell equity, we sell credit, we sweep cash flows, we buy Bitcoin. We've done it 85 times. We found ourselves with about 3.1% of all the Bitcoin in the world. We spent $48 billion to buy it. It changes value every day, plus or minus a few $billion. Doesn't bother me, it bothers other people. I rather like it. I enjoy it. We've gone from an irrelevant company to the fifth largest treasury in the S&P index. You can see the chart. We'll be the number 2 in the next 12 to 24 months. I expect we'll be the number 1 in 4 to 8 years. There's only one company on this chart other than ours that has a practice of accumulating capital, and that's Berkshire Hathaway. Every other company on this chart has a practice of surrendering capital. And so one of the big ideas in the treasury model is, instead of surrendering capital enthusiastically as fast as you can and bragging about it, you might want to keep the capital. Every big bank, every time they have a good quarter, they increase their dividend, increase their buyback, as though that's an accomplishment. Every big tech company increases their dividend, increases their buyback, as though it's an accomplishment. It's not an accomplishment to surrender your money, right? If you walked into your dining room on Thanksgiving and told your family that your idea to improve the family was you're going to give away all the family's money, that way we won't have a volatile balance sheet. It's not good for the family, right? I think intuitively you know that it's not a good idea for you to give away your money. And you know it's not a good idea for your family to give away your money. But somehow, somewhere along the line, the conventional wisdom in corporate finance is that money is toxic, capital is bad, and the most shareholder-friendly thing you can do is decapitalize the company by throwing all the money out. Now, of course, the irony is the best-run companies in the world are in the business of getting rid of money. And that leaves the investors to figure out what to do with the money that's being surrendered by the well-run companies. And there's a certain irony to it all. It comes about because they're all capitalized on the wrong asset. You can see here, in the last 5 years, the cost of capital is 14%. It's the S&P index. Turns out the gold is tracking it. You have two interesting capital assets: metallic capital, gold; equity capital, the S&P index. 14%. That's your hurdle rate. Money markets pay you 3%. Therefore, you're destroying 11% of your treasury assets every year that you hold money markets. Bonds are minus 4%. That's how you bankrupt your bank. The Mag 7's double that number. Bitcoin's double that number. Our company outperformed Bitcoin in the time frame. If your company is capitalized on an asset which underperforms the S&P, then you're negatively polarized to capital. It's toxic to you. So you're going to throw it away as the rational thing. If you're capitalized on a product like Bitcoin that outperforms the S&P, you're positively polarized to capital. You attract money.
What's the second best? There is no second best.